Hi, Jonathan York from Air Financial Partners, looking at investment markets. US markets really waiting to see what Fed Chair Jay Powell comes out with this week. That's on the back of the Fed meeting last week, which was really considered to be a sort of a hawkish pause, really. The committee appeared to imply that the sort of median rate is going to be 5.6 for Fed funds. That appears to imply two more rate hikes. Now that was sort of going against what the market was sort of anticipating. The market was sort of anticipating a rate cut before year end. But it is worthwhile sort of remembering that, up until the last meeting, there have been 10 consecutive rate hikes from the US Fed. And certainly the economy in the US is still pushing along at a pretty good rate. Growth is sort of slowing, certainly, but it's not in recessionary territory yet. You've still got a very tight labour market. And the US consumer remains resilient. Retail sales were plus 0.3 versus expected a negative number. Interest rates sort of holding in. 10 years come back around 10 basis points, currently trading around 372. And the 2 years just backed up a touch, currently at 469. What may just help as well is that the latest round of sort of talks between China and the US appear to be sort of a little bit more friendly in terms of trying to find some common ground out there. There's still plenty of areas where they certainly do disagree, but I really think both parties really realise that there needs to be some sort of harmony there going forward. Oil's come back above 70 bucks, currently around 71 and change. Interesting in the UK, the Partygate review into sort of Boris Johnson and the illegal parties during the lockdown for COVID. That review's come out and really been pretty damning towards ex-Prime Minister Boris Johnson. Now the ECB did hike rates further, 25 basis points. Taking the rate now to 3.5%. Though interestingly, the inflation forecast from the ECB was 5.4 for 2023, and that falls down to 3% for 2024. Now, obviously, all the time in the background, you've still got the Ukraine-Russian war sort of rumbling on. But what does appear to be in sort of evidence now is that the sort of pushback is coming from Ukraine, and they're starting to take back some territory. Though this still looks like it has a long way to go yet. Now in Australia, the migration numbers are down just very slightly. But still a pretty robust economy, and certainly still a pretty tight labour market as well. Latest jobs data coming out there was plus 76,000 versus around plus 18,000, so a very robust jobs market. Now, on the back of that and the sort of slight increase in inflation as well, does that mean the RBA will then hike rates further at the July the 4th meeting? Now, here in New Zealand, technically New Zealand is in recession now with 2 negative quarters. But I sort of commented before, it's a recession like, not one that's been seen before. And really, it's probably more like a reset, getting back to a more sort of normal stance, because certainly the last 3 years have been anything but normal. In terms of the money that's been pumped into the economy, and now the government's really having a little bit of an issue trying to sort of rein that back in, because at present it looks like it's spending around $2 billion per week more than it's taking in. Also, as well, a sort of a veiled threat from the IMF that New Zealand really does need to rein in its spending. But obviously, with the election coming up in October, the government's trying to do everything it can to try and get re-elected. And certainly it's been very quiet on the fuel tax. That's due to run out at the end of June. And if that isn't extended, then that's a further 25 cents going on a litre of fuel. Which will just add further to the cost of living crisis out there. But certainly net migrations are still pretty strong, and the government's had some further tweaks out there to the sort of skilled worker migrant visas coming through now. But at present, net migration is running around 72,000 for the last 12 months. That's a pretty big increase. Really good time to be checking those KiwiSaver contributions as well, just to make sure you made enough contributions to get that maximum government contribution. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm going to look forward to speaking to you soon.